Hello everyone, Osbrah here. It's been quite a long time, and for today's video, as every single week, we're gonna do our little market review so you can have an outlook of what we are expecting to happen for this week and the levels to watch on the technical analysis side as well. So we're gonna start first, as usual, with the macro events of this week. Okay, so I suggest to go to Forex Factory. So you have all the events and they are marked with the most important ones are marked with red folders. So this is what I suggest to do every single week on Monday morning. Check the events, the upcoming events. So you don't get caught by surprise. So obviously it's going to start tomorrow on Wednesday, September 10 with the PPI and the core PPI. So the producer price index. Basically, it will give information about the current state of the inflation. Remember, the last PPI was very bad and the market instantly corrected and went from a new all-time high to around 110K. This is the level we're currently in right now. So you want to be extremely careful. And then on Thursday, another batch of important data will have the CPI and the core CPI. Once again, this is the major inflation data that we are getting every single month. So you have to pay a lot of attention to it. And we also have the unemployment claims as every single Thursday. As you can see, inflation is expected to slightly increase and the unemployment claims are expected to slightly decrease. So if we get this combo, it will be very bad for the market. This is definitely not what you want to see. So pay a lot of attention. For Forex traders, we're going to have the ECB, so the European Central Bank press conference. Pay a lot of attention. What they say can have an impact on all euro pairs on the Forex side. All right. So beside that, we also have Trump having ongoing talks with India, with China, even though the relation seems to be a little bit less cold than it used to be the last month or the previous month. So pay also attention to what they have to say on the geopolitical side. We'll jump straight to the technical analysis, and as usual, we're going to start with BTC. So is Bitcoin on the daily. As you can see, we're in a big range. All right, it goes from 100K to basically 120, 123K if we want to be accurate. And right now, all right, with after tagging the 109, 108 demand zone that we had just here, so we had some nice support, but right now, as you can see, we're still at resistance. Okay, and if you zoom in, if you look at the wicks, you see that the price couldn't close above a single time on the daily. So until it does, we're still bearish on high time frame, on the daily time frame. What I want to see to flip bullish is a close above, a retest, a reclaim, and then we can expect to go higher and tag the next level of resistance around the point of control here at 118, and then eventually the range high around all-time high. Okay, so remember, even though we had a nice move on lower time frame, this is still bearish on high time frame, and you want to be cautious. This is definitely not the level where you want to FOMO. We're gonna now jump into Ethereum. So Ethereum is now in a range. You see, this is a low time frame analysis, and Ethereum is in a range. Basically, it's been trying to hold the 4260 level, and it's been trying to break, and it failed 3 times already, the 4500 level. This is the main resistance on ETH before potentially retesting all-time highs around $5,000. All right. So if you're looking for a position on the buy side, this is definitely your level. We have a nice bullish order block right here with a point of control as well. And if it fails, then you want to be cautious because as you can see right here, we have lows to be taken. Okay, so if this level fail, don't try to knife catch because the price could go much lower. We could go and retest the symbolic level of $4,000. Okay, that's it for Ethereum. So remember, level of support right here, then potential TP here, and another TP here around $4,500. All right. So now, as usual, we're going to check the altcoins. Altcoins market, so this is the total tree. Remember, the total tree is the crypto market cap excluding Bitcoin and Ethereum. So what we can see right now, we are below the major resistance. Why do I say it's a major resistance? Because it's basically the top of 2021 cycle. All right, we held an important level around 1 trillion of market cap, but the major level is this one. Once we flip this, we have an alt season. As long as we stay below that level, we're still in a range. You see, we have a massive deviation here. We could argue that the range low could be placed differently, like this, for example. It's something we could talk about. That would make sense as well. But basically, as long as we don't break this level, we're still in a range, and altcoins could correct quite well in the next few days, next few weeks. We'll see. Remember, we have FOMC coming, and that could help taking a direction. All right. So now that we're done with altcoins, we're going to jump into the traditional finance, and obviously, we're going to talk about the S&P. S&P is still in an uptrend, as you can see. We have successive, consecutive higher highs and higher lows. All right. So as long as the structure is intact, this is still bullish. For today's session, maybe for the end of the week, you have this level right here around 64.80 that could serve as a support and a potential long entry. And you also have 63.80. I would be very cautious if we start to lose this level, because then, as I said, we would invert the structure from bullish to bearish, and that wouldn't be good at all. All right, we're gonna end this analysis with the DXY. As you can see here, if we look at on the high time frame, the DXY is still in a downtrend. Okay, this is the weekly chart, and we can see that it's still in the downtrend. And we discussed about it in the blog, but I'm still waiting for 95 to be tagged or 100 to be tagged. And then we'll see what happens. If we bounce off the 95, it will be bullish, obviously, for the DXY, and it means bearish for risk on assets. If we lose the level, it would be amazing for risk on assets, so crypto, stocks, indices, etc. However, if we flipped 100, if we reclaim 100, it would be very bad for the risk on assets, for the crypto market, the stock market. If we reject, it would be good. So we could expect a correction on risk on assets. If the DXY starts to climb back up, it will most likely depend on inflation numbers. Okay, if inflation is high, most likely it will help DXY to regain some strength and trust from investors. If inflation is decreasing, and obviously this will go lower as well, because people will simply expect more rate cuts and a more accommodative monetary policy. So once again, don't forget to always manage your risk. This video has the only purpose to be informative. It's not financial advice. So you should only see it as guidance for to make your own decisions. And see you next time. Cheers.